Good evening, everyone. Welcome to this live webinar here at Elevating Forex. Just before we start with the introduction, allow me to make sure that everyone understands that this webinar is used for educational purposes only, and myself or Elevating Forex, we don't intend to provide any trading or investment advice or any kind of personal recommendation. So for those who are new here, who is new on this webinar, please, okay, don't raise your hand up, just put it on the comments on the chat below. Who is here for first time? And also, for those they are, of course, watching us here, please let me know, where are you watching us from? Come on, let me know. Zahid said hi. Hi, Zahid. Nara said hello. Someone said hello, sir. How are you? Very well, thank you. What about you? Pilot said from West London. Felipe from Spain. Nice. ExoFP is the first time. Kempton Park, South Africa. Welcome. Noah from Australia, the beautiful Australia. Eva said hi, Theo from Ireland. I'm here first time. I'm watching from Kuwait, but I'm a Ghanaian. That's from Muscat. DN said hi. Bas from Rotterdam. Nick, first time here from the UK. Vivo from India. Vlatsan from Bulgaria. Alessandro, hey, Theo from Italy. I think I remember many of the names, by the way. Rocky from Malta. Carol from Poland. We have also people from Canada. Mumin, welcome to our webinar. Martin from Czech Republic. From Belgium. Oh my God, there are so many if I keep reading. Oh my God. Philip from Belgium, Slovenia, Latvian. Hello from Dubai, Hussein. Michelle from Germany. Nice. So, and of course, everyone else. My name is Theo. For those they see me here for first time, and I'm the person that you see on the picture in front of you. So I'm in all social media platforms. If you want to check me out, I mean, you can see my LinkedIn, you can see my Instagram pages and all this stuff. So why am I here? What's the purpose, and why you can pay attention to the information I will share with all of you guys tonight? Because I'm a certified financial technical analyst. I've been in the industry of trading for 12 years. I'm an active day trader and swing trader for the last 12 years. I'm also a certified market technician, so I hold the certification by the Society of Technical Analysts that's based in the UK, and I also hold the certification by the International Federation of Technical Analysts that's worthwhile. Okay, so I love trading CFD products and futures, and primarily currencies, indices, commodities, and cryptocurrencies. And what is most important in trading currencies or any other asset is to understand the correlation, and that's what I also teach in my courses. My daily, if you want to share what I do on a daily basis, besides the trading activity I have during the most liquid trading sessions, which it's primarily for me, the London and the New York. I do deliver market analysis for hedge funds, for prop firms. So in terms of fundamental and in terms of technical analysis, I also publish some articles in financial magazines. And I did I did hundreds of webinars there on YouTube, but some of these webinars are with Mr. John Bollinger here on the panel, where I point. He's the creator and the force behind the Bollinger Bands, if you ever heard or used them before. If you are using candlesticks, it's because of this gentleman here, Mr. Steve Ninson, that introduced us to the candlestick, where So if you are reading charts with candles instead of bar charts or Heiken-Ashi perhaps, then it's because of this guy here. We did a nice webinar and many other very smart and exceptional traders like Alex, like John here, like George Fraser from the States. So let's start with our charts. By the way, if you want to see any analysis of any currency pair, please, or any asset, please list it on the chat below. Are you still here? I hope you didn't fall asleep on the computer or your devices yet, because this week it's expected to be again very volatile week like the previous week. So gold, please. Krishna, how are you doing? Gold, Theo, please. We will check the gold. So last week, what did we say about the euro US dollar? Oh, I think we need to add the watermark. It's easier for everyone. Yep. So what I do for our new traders here, I always check the weekly price action and the weekly direction. And based on this, I go to down to the 4-hour or on the hourly time frame, and I take trade, meaning I execute the trade. So by having the higher time frame as the guidance time frame, going down to the lower time frame to execute the trades, it not only secure high probability setups, but it's also make sure that we understand the direction we want to trade. Okay. Now, for those who are new here and want to learn on a personal scale how to trade, you can reach out to me, and I have my trading courses, of course, and I can teach you how to trade the way I trade. Okay, so on the euro US dollar last week, we were expecting, based on this bearish candle, to see the price moving lower. I understand that many traders, they reach out on the YouTube and they see the ICT concept and they say, Theo, I don't use any indicator on my chart. I don't use any RSI. I don't use any moving average. All these are crabs. They don't work. Allow me to share with you, because I consider myself and any other and many other traders, we are in the circle of professional traders because of the way we trade, the volume we trade, and of course, because we can rely on our trading results, that all the hedge funds, all the big prop firms, all the heavy trading firms, they all uses moving averages, they all uses Fibonacci, they all uses support, resistance, they all uses the price action, they uses the line charts, the bar charts, the candlesticks, the things that they, the Dow theory, most of them they are using. Okay, they are trading billions of dollars on a daily basis. So if we don't want to pay attention to how the money moves based on the technical indicators, then we are missing a lot of what we can achieve in trading. Because my purpose here is not to show off how can I analyze the chart or how can I trade, but is I'm trying to help you becoming a skillful and at the same time a successful trader. Okay, so, and my main goal for every trader that comes on these webinars or on a private sessions with me is to make sure that you can make money based on what we're going to say. Okay, so that's my primarily purpose. I don't want you to become an analyst. Analyst, it's one thing. Trader, it's another thing. Myself, I'm on both sides, but I know how to separate them. Okay, when I trade, when I'm a trader. When I do market analysis for hedge funds and prop firms, I'm a market analyst. So these are two different things. Okay, and I see many traders, they try to analyze the market and they don't understand the execution process. So with this one here, last week we said that we do expect the price to decline. But always understand that if there are some moving averages on the chart, like this one here, that's the 40-period moving average, we have to respect that. We have to credit that to the market, that it might create some dynamic support, and that won't happen. So once the price started decline, and for those that were on the webinar last week, we said on the hourly time frame, we're gonna focus on this bearish candle, bearish Marubozu candle. Guys, what did I tell you? The middle of the candle, usually it hosts the most significant volume. So if we use the Fibonacci from the high to the low, and we're gonna go on the 5061.8, look at this, 50%, exactly the middle of the candle, created on Tuesday during the London trading session, this hanging man price action reversal, which you could have taken advantage of that. Okay, so, and just to know the reason I use the 50-period moving average on my hourly time frame, it's because most of the professional traders, they are using the 50-period moving average. That's why I just use it to validate the trend. If the price is above the 50-period, I combine other technical stuff before I take a trade if I want to short. But basically, the price is above, I'm looking to be a buyer. The price is below, I'm looking to be a seller. I just keep it simple, okay? Trading doesn't need to be complicated. It can be simple and profitable at the same time. So, saying that, the price here, it created a bearish engulfing candle. By the way, bullish, bearish engulfing, long lower wick, long upper wick are the most profound and the highest probability candlestick price action patterns that I personally use, plus with the 3 candle formation to enter. These are my signals. This is how I take trade, and I'm sharing pretty much every time. I'm sharing with people this candlestick. So if you want to receive them, I can send you the slides. You just let me know that you want to receive them. I can share with you. You can contact me directly, or you can send that Elevating Forex support, and Georg can redirect you to me, and I will forward you the slide. Or if you want to do it faster, you can just send me a message and I will just send you the slides. That doesn't make any change, any difference. So we continue. They were 3. This one here, it's one of the, this is, I don't send it out, I just explain it to the people that they are that I explained it in my trading course. Actually, the dynamic of the 3 candle formation, the bearish battle and the bullish battle, okay, of the 3 candle formation. So that was another trading setup that we could trade. And yeah, pretty much that was it with the euro US dollar. It was until the middle of the previous week, because we didn't get kind of signals. For our friends that they live in Australia and they perhaps trading during the Asian trading session, they also had some great opportunities. So around, for example, this bearish engulfing here, we were looking to go short. I like to understand if there is a trend, an uptrend within the content of a downtrend, and that was the uptrend. And then the price made a lower low here, change of structure, and then it created a bearish engulfing close to the 50-period moving average. That's cool. And we just took the trade. Okay, sorry, I didn't take the trade. I was sleeping at that time, but people, they live in Australia, they could have taken that trade. Now, what to expect this week, guys? First, the European Central Bank are reporting interest rates on Thursday, and they are keen to cut the rates for the 2nd consecutive month, for the 2nd month in a row. So if this is going to happen, and the market, of course, will follow through, we're going to see you know what, the euro, it might going to melt like those chocolate cakes you take out from the oven, okay, and they just and they just melt. So That's what we expected to happen with the euro. I also live in Europe. I use euros, but I mean, when I'm trading, I just go after the tradable opportunities. And I think that the euro, it can just go much lower. Now, if something changes, we don't know that, but we're going to read the charts, we're going to read the price action, and we're going to trade accordingly. So we are doing these kind of scenarios now. Next one, Great British Pound against the US dollar. On the weekly chart, we marked this support last week, and we said that our room for opportunity, it means the tradable, high probability tradable room of opportunity. By the way, when I'm shaking my hands and you see that the camera goes up and down, it's just because it's a feature of the camera. Sorry for that. If you are looking left and right to see where am I in the screen. So don't think that I just moved the camera or myself purposely. So this support here, it acted as a brilliant support. Actually, it's about 1.300 and it's a round number, market respected. So what I challenge you to do when you are trading is not to be greedy when it comes to profit taking. Many times traders, they get scared of missing out from an opportunity and they are rushing to get into the market. They don't think in terms of reward to risk. Okay, in trading, the only way, I guarantee you that, the only way, pay attention to that, you're going to make money in trading and you're going to be consistently profitable trader is when you learn risk and probabilities. The entry can be okay, but if you have a very solid risk to reward ratio, a very solid understanding and appreciation of the support resistance levels, and you trade only on the high probability opportunities, I guarantee you, you're going to be a successful, a skillful, and a profitable trader. Next week, the sterling, if it's going to break below the 1.3 and continue lower, let's zoom out a little bit, then the next support area, it's going to be down here. And the price rarely just goes in a straight line. It goes in that wavy pattern. So it's going to give us some bearish engulfing or something to trade. Now, on the other hand, if the market, it's going to make, it's like it create a false breakout here. If it's going to make a higher high above this high there, and it's going to move downwards, we expect that an uptrend is developing and we're going to trade along with this higher time frame. Okay, so some questions so far. Alessandro asks, what are the best indicators? I mean, how to set up 3-4 indicators to use at the same time for set up the trade. There are no best indicators in, let's say, in ranging market. The Kettle bands, they work, or the Bollinger bands, they can give you a good understanding of the false breakout. Okay, when the market is trending, maybe we can use a couple of moving averages. In case here, when the market approaches a strong level of support, a key support, we can use some kind of RSI or MACD. Okay, also the indicators has to be chosen based on the trader's better understanding. What you, for example, there is I have a good friend of mine, he's also a professional trader, and he uses the commodity channel index and the on-balance volume indicators. He finds success using these two indicators, which I know them, I understand them, but they don't make sense to me. They don't fit my trading personality. So I don't use them. What do Phillips asks, what do you think about Great British Pound, Japanese yen? We will go through that, of course. Alessandro, what are the best time frame window for trading? Looking at London and New York trading sessions. Okay, that depends on on your trading personality. This is people, they think that when they come on coaching with me, they're gonna learn only candlesticks, they're gonna learn only how to read the market. The most important thing, I teach you how to understand the not risk evaluation, how to understand. I don't like the phrase risk management because it's misleading. It's not risk management, it's reward to risk ratio. Actually, that's what I make sure that the traders understand and learn risk to reward ratio. And I also find out what kind of risk threshold each individual can assess. So we create or we adjust strategies, profitable strategies, according to that trader's understanding. For example, ask me to trade 15-minute charts and I might gonna get, let's say, bored. But if I trade the 1-minute chart, which I'm trading 1-minute chart, I can stay focused there for hours because it's something that resonates with my pace. I get it and I move with the price. I can take trade after trade after trade after trade, be in a losing trade and stay focused and trade the next one and the next one. So it depends on each trader's personality. And guys, I'm telling you stuff that you have the privilege to have them here totally for free. And I wish somebody was able to tell me this stuff when I first started my trading as well. Yeah, Desert said pivot points, it's all you need. Absolutely. If that works for you, absolutely. Pivot points are exceptionally great stuff to use, great indicator. So next one, USD Japanese yen. USD Japanese yen, actually all the yen were with this bullish engulfing candlestick, and we expected last week that the price will continue moving upwards and a bit strongly, but it failed to do that. Also, the Great British Pound Japanese yen failed to do that. And we saw just a very small doji candles, either with a noticeable, let's say, amount of body here, open to close price, or with a very flat body like the doji candles. And this raised that the concern that, hey, maybe because all the buyers from here, they didn't manage to push the price higher, maybe we're going to see some downward move next week. So we have to approach cautiously this stuff. Also, last week here, it was a massive bearish engulfing candle on the hourly time frame, and the price didn't manage to really move higher once it came up with momentum. So let's see what's going to happen. I prefer to wait for actually there are great opportunities. I will show you in a while some currency pairs. What we can do here is either wait for the price to break below this 148,300 level and then start looking for short positions, or we have to wait for the price to break above the high of this bearish engulfing candle. Why is that? Understand some traders, they get frustrated, they want to do it right now, they want to do it instantly. But guys, we are not moving the market. We are not the market movers. We are not the price creators here. So we have to see what the market offers, and we have to make sure that our trading plan fits this market behavior. Okay, if it doesn't, then we look for a market that fits our trading plan. Next one, Great British Pound, Japanese yen, weekly time frame. As you see, we had last week this bullish candle here, and actually 2 weeks ago this bullish candle over there, and last week the price didn't move at all. It just created this doji candle here. So Either we're going to wait for the price to move above or below the low of this doji candle, because on the hourly time frame, we're going to pretty much see the same picture. The market here, it's sideways. It doesn't have any trending structure. It doesn't mean anything in terms of high probability trading setup. So I'm just bypassing it, and I'm not going to look into this market this week. Next one is the Euro US dollar. This is quite interesting because last week, remember, we said this bearish engulfing can offer lucrative opportunities. And at some point, the market moved below this weekly moving average and it backed upwards towards the end of the previous week. So it kind of makes lower highs and lower lows. But what I said last week is that if the weekly it's in an uptrend and the price action is not a bullish reversal price action, then it becomes a low probability currency pair to trade. But again, if we find a nice cycle, a nice higher highs or higher lows to trade an uptrend, wouldn't we try to take the trade? Yeah, sometimes we will, but again, we have to understand that high probability and low probability is very important, actually. Okay. Nick asks, what's your favorite or top pairs you like to trade on? Okay. It depends. I have a favorite strategy, a favorite price action setups, and if any market fits that criteria and it has the reward to risk, which if I can enter the market with, let's say, 10 pips, I have the opportunity to make 20 pips or more. That's my favorite setup. But in terms of which currency pair or which asset, which commodity, for me, they are all the same. As long as we understand their behavior during different news events, that's all it matters at the end. Let's check the gold. So, guys, I want you to pay attention to this one. Remember, last week, we were looking at the gold here, and I said we have an inside candle. That's the weekly chart. Gold, it's at its all-time high. Let's use this chart. It's better. So gold made an all-time high right here. This inside candle suggests that the price or the bullish momentum runs out of steam. Therefore, we can cautiously approach some sell opportunities, but we had this support here, and we said it's a significant support because of this high, of this low, and of that low. Therefore, if we are selling, we have to understand that this support here is important. And we don't try to become the billion-dollar hedge fund who is going to decide if this support will break or not. Okay, so on the hourly time frame, remember we said that the price first needs to break below this low level here. We said that, and either we're going to break above this high or we're going to break below this low here, all right? And I said unless we're going to see a break, either way, I'm not going to look for any trading setup on the hourly time frame. Of course, if we go down to the 5-minute chart, as our traders, they do and send the signals on a daily basis on the premium channel and on the free channel, then when you trade on the 5-minute chart, it's totally different story. You see different trends, you see the momentum is different and all this stuff. When we trade on the hourly time frame, the room of opportunity also is different, and the market structure also is different, as you can see. for the 5-minute chart, this much candlesticks, they are, let's say, couple of days, the couple of last days trading activity. But for the hourly time frame, it's, let's say, couple of weeks. So it's a different way of trading these two stuff. But for the hourly time frame, I said if the price breaks below here and the price made a lower low, then and only then I'm looking for a short position. So then the price moved upwards. I will explain you what I did here. Price moved upwards, and at the 50-period moving average during the New York trading session, that was on Tuesday, the price printed a bearish engulfing candle. Again, if you don't have bearish engulfing, bullish engulfing, low test, high test, or long lower wick, long upper wick, guys, they are important. Ask me, I will send you this stuff. They are very, very important. Please, if you want to be a successful trader, you need at some point to have some, what I call, basic understanding, okay, of this one here. So again, either send a direct message to me or send that support elevating forex. I continue. So after the price created a bearish engulfing, and during a New York trading session, the market will get a directional move for this trading session. The support, it was down here. If you don't use Fibonacci, you must learn how to use some basic stuff of Fibonacci retracement and Fibonacci extension for your take profit target. I challenge you, put the Fibonacci extension on every swing, and you will see that the 161.8 is the most accurate level that the traders, the big traders, they taking their profits out of the table. Sometimes the market goes and goes on, but most of the times it reverses at 161.8. So that was the entry, and 161.8, yes, it was a bit stretched under the support, but it was worth looking to take this trade. That was the only trade I could see fitting a high probability scenario on the gold last week. Okay, now what do we expect from this week to happen? Look at this price action here. The price didn't close below. The price didn't enter a retracement. So from next week, we do expect it that it's going to move upward. But please understand, there is a strong resistance area here. It's the all-time high. If you are in this trade and you are a buyer and the market comes up to here, manage your trade, secure some profits. Don't try to be the guru, voodoo, whatever, okay? Be disciplined. There are trading opportunities 24 hours, 5 days a week, okay? So that's for the gold. Next one, Euro, Great British Pound. Last week, we said that bullish engulfing at support, but in a downtrend with some no bullish divergences on the other side. Doesn't make it sound very good opportunity. What I understand from this one here is that the buyers, they weren't near. So next week, the European Central Bank are about to cut rates for the second month in a row. So markets, maybe they are waiting to see what's going to happen for this downtrend to continue. If the market drops below that one, okay, the next support area I see it's down here. So if we go on the lower time frame on the hourly chart and the price will break below this support, then we have all the room to find for this lower highs and lower low formation until the price reaches this area down there. Do you guys understand it? Are you still here? Did you fall asleep on the screen? I'm trying to making these webinars very engaged so you can ask anything you want. This is your time. These webinars are for you, and take advantage of my presence here and ask me anything you need to know, to learn, to understand. So what I'm going to be focusing on next week, it's going to be the Euro Australian dollar, of course. I see some people, they already left the webinar, but you guys, they stay at the end. You are the lucky one. You know it, because towards the end, I always give what I'm going to trade next week. Okay. So why I do that? Because I respect and appreciate every single one of you that you are still here on a Sunday night, and you are willing to learn, you are willing to become a successful trader, a skillful trader, and I want to give you the most and to max out on this stuff. Last week on the Euro Australian dollar, we had this reversal price action as well as bullish divergences, B class, something you may not going to find it on the internet, maybe yes, I don't know. There are divergences, A, B, and C class. Next Sunday, I will explain you. I can make a slide and I will explain you about these three divergences, okay? So this is divergence B class because the price makes a double bottom here, and we had a reversal price action on the weekly chart. So we said, let's go down to the lower time frame and wait for the market. We were here actually on Monday. We said, let's wait for the price to start giving these bullish engulfing price actions to going long. Okay. And we had this one here, bullish engulfing here. This is one of the most powerful price action formation, the three candlestick. That's what I like to call the sandwich. Okay, the sandwich. So this was a very high probability setup. Another one here, another one bullish engulfing over there. This one here, I think it was during the Sydney trading session. This one, yeah, at 0. So if traders, they took this one, that was a losing trade. And after that, the market dropped. Now, what we expect from next week is the price to continue moving lower in the anticipation of low interest rates by the ECB. I say this again and again and again because there are banks that no, the New Zealand, actually the Reserve Bank of New Zealand also cut the interest rate. So pretty much all the banks now, as far as, yeah, all the banks, all the major 7 banks, they cut interest rates. But for second month in a row, nobody did it so far. And the European Central Bank is about to do it. So we expect a very weak euro. Like it's going to melt like the chocolate. If you don't like chocolate, maybe like a marmalade. I don't know. But I expect that it's going to melt. Okay, that's the easiest way to put it there. So next one, the Euro Canadian dollar. So what happened last week? Actually, we had this bearish engulfing candle, and we said that if we don't see a reversal price action on the weekly chart, then it becomes a low probability setup. Okay, so and we said if the price only moves below this support around 149, then we're going to look to go short until this support here. But on the hourly time frame, guys, the price from Monday on Tuesday, I think here on Tuesday, it created a totally new market structure. Double bottom here from Friday, and on Tuesday, it took out this bearish engulfing. When you see this kind of bearish engulfing candles or bearish Marubozu candles, and the price gradually surpasses its high or its low like this, and it changes the market structure, it means that the market is reversing now. So After we saw this kind of trend, the market came back to the moving average, bullish engulfing here. It's my favorite price action setup under these market conditions. Higher high, bullish engulfing, just to bounce off the 50-period moving average on the hourly time frame. And it was, we apply the Fibonacci extension and we just get, it was 2.7 to 1 reward. Usually I go for 2 to 1. But if there is 161.8 that it can give higher risk, I always go for that. Now, after the price goes to 2 to 1, I always remove the risk from the table. I always drag my stop loss at the break even, because I don't want to get caught in any weird situation, okay? Because markets can do anything. Now, this moves upward. Price makes higher highs and higher lows. I will not be very interested in trading this one to the upside, because the euro most likely is going to get weak. And on the other hand, the Canadian dollar, based on the news, I think they have a CPI. Let me just check quickly. Next week, where is the Canadian dollar? Canadian, where are you? Anyway, it's something with a Canadian dollar. Yeah, here is a Canadian dollar. Yeah, CPI, Consumer Price Index, it's expected to increase in Canada, so it can boost the Canadian dollar. So if the European Central Bank drops rates, Canadian dollar is going to get stronger. So we're going to see a lower high and lower low, and this is going to be one of our favorite currency pairs to trade. Okay. Selection, it's important. Next one, pound, Aussie Canadian pound CAD here. It was the exact same setup with the euro that offer higher reward to risk. Okay, you have to know that the sterling, Great British pound, it's much more volatile in general compared to the euro or the Australian dollar. So if we get the trade right, the sterling most of the times gives better and faster and better results over there. So I'm not very keen with this one here, to be honest, because the price last week, it didn't make a higher high on the weekly chart. So I can see a kind of weakness here in the market. So I prefer to stay out from the pound CAD next week. Australian dollar, Canadian dollar, last week, although we said the price, it's going to move lower because of this bearish candle, the major trend is up, as you guys see. So at this point here, the price found support at the weekly moving average. On the hourly time frame, it just started making a higher high and higher low formation. This bullish engulfing here, it was what I like to trade, and I placed a buy limit order here, but it didn't get filled with a stop loss there. It didn't get filled. The price came up to there. It didn't touch this line, and I just purposely left it on the chart so you can see it. Not everything we do, it makes sense for the market in trading. So some orders will get filled, some other not. So that didn't work, and it's totally fine. And where is, I had some losing trades here I would like to show you, but I need to find it. So Australian dollar Swissy, yeah, that was a bit weird. Price on the weekly chart was at this resistance here. We marked this some time ago. 2 times the price failed to move above this resistance. Overall, the market is in a downtrend. We said about the reversal price action, but it wasn't that prominent, to be honest. And because we were expecting the Bank of the Switzerland National Bank with their rates, with their cutting rates, okay, and we expected the Swissy to keep moving downwards also last week, but it didn't happen actually. So this one on the hourly time frame, it was a little bit tricky, but it was worth taking the trade. We had this high here. the price created an FBO or false breakout, created a bearish engulfing. So BE, entry, stop loss, that was the most recent swing low, and no matter what, we should have been out of the trade at that point. Okay, regardless, maybe the price will have continued moving lower and lower and lower. We don't care about this stuff. We just trade until our high probability setup. Someone asked, Vladislav asked, can you show US 30? Of course I can show US 30. So on the US 30, last week, the price created this bullish engulfing reversal. It's a new all-time high. If you go down to the hourly time frame, you can see that the price, actually, let me show you the 4-hour chart, because this, I'm going to send it out tonight to a hedge fund, this analysis. So we have this fair value price here from last Friday. We have this bullish engulfing order block here. We have another bullish engulfing order block there, and measuring the swing at point A, swing at point B, to find out the next potential all-time high, the 300% Fibonacci extension. It's a little bit higher than where the current price is, but despite that, what we see here is a market that is rising. So if the price comes here, this can become a solid area to look for entries along with the bullish momentum. If we don't see a price action reversal, if our analysis fail and we see the price making a lower low here and continue moving lower, of course, it means it changed market structure and we will look for short opportunities. Okay, but this is what you need to understand, that the price now moves upwards, the market is bullish, so we want to trade with the momentum instead of trying to find that trade that we're going to go out to the pubs or we're going to say to our friends, hey, look at what trade I took there and there. Yeah. VS asks, what do you think will be correction levels on gold on Monday? Okay, let me show you this chart then. So for the levels on Monday, for more higher time frame, hourly time frames and this stuff, so you need to have on your chart, of course, this level here on the hourly time frame, this swing low there. This one here, I'm not going to consider it anymore as an inside support because it's been tested last Friday. So if the price comes here, remember me, most likely it's going to come all the way down there. There is no any fair value prices or gaps left here. Okay, so this level here has to be on your chart. If you are a trader that looks on the 15-minute or 30-minute charts, even on the hourly time frame, then this level, it has to be down there, and the previous week's low, of course. In terms of high, you need to have this resistance here. You need to have this resistance over there. You are very welcome. DN said, first time here, a lot of valuable information. Thank you so much. Nick said, thank you. I was about to ask if could let us know what we were going to watch for this week and already giving the answer. Thank you. Blaze Pinto said, my first Sunday session, Theo, and you have a great presentation style. Details across all the asset classes is top notch. Thank you so much, Blaze. Appreciate your time around. Eva said, how will market move as US bank holiday and can bank holiday in Japan do? Yeah, definitely on Monday, actually tomorrow. In Japan, bank holidays. In Canada, bank holidays, Thanksgiving. And in the US, bank holidays. So, guys, pay attention to that. The spread, and especially if you are a new trader, the spread is the difference between the bid and the ask price. Okay, so the spread is these two lines you see here. These two lines, the bid to ask price, is gets smaller, narrower when there is a lot of trading activity by major players like banks, not hedge funds. We are talking about banks now because the Citibank, the JP Morgan, they are giving the prices to the MetaTrader, to other. Anyway, I'm not going to give you a session now about how the market works, but pay attention to these two lines. And when there is less liquidity, it means where are bank holidays, many times we see the lines get widened. It means that when you are trading on the lower time frames, your stop loss might gonna get hit because of the high spread. Okay, so pay attention to that. That's the only thing you need to worry about, the low liquidity based on the holidays. Okay. Bassam said, do you think the market will indicate it downwards to 26? Do you mean to 2600 down here? So for the market to come down here, it requires significant selling pressure. It requires that all the buyers here and this false breakout, this bullish engulfing combo, it has to fail. That's the 4-hour time frame. It has to fail for the market to come down there. Okay, now if the market fails on its way down here, definitely we're going to see a penetration of this 2600 level, and the market most likely it's going to hit all the way down to 2550. VS asks, will you go in detail on Divergent next week? I will do my best, but I'm not going to spend 45 minutes or 50 minutes to go through the divergence. Okay, I will just mention them, explain them. I won't have time to give examples or do workshops like I do when I deliver my trading course. Okay, so I think that's all from me today, guys. If you have anything you want to ask me about markets, if you need some help, some support in trading, don't hesitate, feel free, ask me, we can discuss, we can find a solution on anything. That's all. If you don't need anything and you are happy with your trading, I'm also happy with you. Keep going. I would like to wish to everyone to have a fantastic and a profitable week ahead in trading. So I wish you to have a lovely evening. Thank you so much for attending this webinar tonight, and I look forward to see you again next Sunday here at Elevating Forex. Have a great night, everyone, and again, thank you for being here. Bye-bye.